Being financially knowledgeable and taking proper financial decisions is very important throughout your life, but at the age of 40 it becomes more crucial. At the age of 40 you have already crossed half of your life and remaining only the next half of life is left. You must work hard and set proper goals and strive to achieve it. In this video, we will tell you 8 such goals which you must achieve till the age of 40, and if not achieved then, start trying to achieve it within the next 10 years. Now let's directly begin with those financial goals. Put an end to your debt from purchases. If you want to pay off whatever debt you accumulated over the years, 40 is a terrific age to do it. Ideally, you should also pay off your student debts while you're at it. This might include items like credit cards and auto loans. The exception to this rule is a mortgage, however you can still set an individual objective to pay off the home loan early. You'll be able to advance on all of your additional monetary objectives by 40% faster without these loans weighing down your net worth and depleting your monthly budget. Maintain a reserve for unplanned expenses. A reserve for unexpected expenses helps you be prepared for life's many turns and problems. To have at least 6 months' worth of expenditures maintained flexible in a savings account by the time you turn 40 is an excellent emergency fund goal. In this manner, you may allocate more funds to various assets while still retaining a sufficient amount of money out of the market to cover any unforeseen expenses. If you lose your employment or are out of work for an extended length of time, having an emergency fund will help you meet your normal expenditures. You have a decent runway of 6 months to come up with a fresh strategy without having to sell off assets or take out loans to make ends meet. Emergency money can also be utilized for unanticipated auto repairs, medical expenses, and other expenses. Before moving on to the video, I would like to request you to press the subscribe button for more amazing contents related to finance. Now let's continue. Increase your funds for retirement. The ideal time to guarantee you're prepared for your future demands is in your 40s if you began working in your 20s and want to retire in your 60s. By the time you are 40, experts advise you to have at least 3 times your annual salary stored in retirement funds. Accordingly, if your yearly income is $50,000, it would be optimal if you had $150,000 saved up in various retirement accounts, such as a 401k and IRA. Even tiny sums may increase fast if you can start early, despite the fact that it may sound frightening. For instance, presuming a normal stock market return of 8%, if you started investing at age 22 and put down a little more than $10 every day, you would have $150,000 by age 40. That may only represent the distinction between preparing lunch at home and dining out. However, you can catch up even if you didn't start saving until you were older. The amount just won't be as low as $10 every day. Work around with investing calculators to determine how much money you'd need to put aside to reach your goal. Boost your credit score. Your credit score may help you get amazing interest rates on loans such as mortgages and business loans, among other things. You may set one of your 40 financial objectives as raising your credit score, depending on how high it is right now. Try to move yourself from a poor or a fair to a good or excellent, or at least up a few categories. A score of at least 720 is considered to be good. Discover how credit scores function and get some advice on how to raise yours. Simply making on-time loan payments, including those for credit cards and auto loans, is the best advice. Keeping older accounts active can help you build your credit history and keep your usage rate low. Try to keep your monthly credit card spending at $500 or less to maintain a 10% usage rate, for instance, if your credit card has a $5,000 credit limit. Review your own objectives. Your financial objectives at the age of 40 could not be the same as someone else's because everyone travels their own route in life. Finding out what's essential to you and creating preparations for it are the main objectives of the same. Are you looking to buy a home, or renovate it, or move up to a nicer one? Retiring early? Go on a globe tour on a sabbatical? For your children, do you have a good college fund? This is an excellent illustration of how sinking funds may be used, regardless of your objectives. By designating money to a certain purpose, sinking funds enable you to psychologically organize your financial resources. Depending on how soon you anticipate needing the money, you can keep sinking money in a savings or investing account. Naturally, if your objective is to retire earlier than expected, you'll contribute more to your regular retirement funds rather than a separate fund. Form a will. Even if 40 is still a young age, one can anticipate many joyful decades in the future. However, no one can predict the exact nature of the future. When you have a will, you can rest easy knowing that if something were to happen, your loved ones would be taken care of and your money would be put to good use. Invest in your health. By the age of 40, make one of your financial objectives to invest in your health and well-being. This one combines a personal and financial objective in a way. One of your most valuable resources, health may have a big impact on your financial situation for better or worse. It's worth investing more time and money in now so that it will need less of you as you become older. In addition to improving your life right now and the way of life you can lead in retirement, taking care of your health can help you save money on medical costs and health insurance premiums. You no longer need to spend hundreds of dollars on organic golden apples pollinated by Mount Olympus nectar, or Instagrammable athleisure. That's all for this video. I hope you learned something new from the video. If yes, then do press the like button as well as the subscribe button. One like and subscribe motivates us to make more videos related to finance. Thanks for watching.